If you are in the business of moving goods, this video is for you. A major GST change on multimodal transport services came into effect from 22nd September 2025. This isn't just a number change, it completely reshapes how logistics are taxed. So in today's video, let's break down the basics of multimodal transport, explain the old and new GST rules for service providers, and most importantly, tell you what this means for businesses that are on the receiving end. First, let's get the basics right. Multimodal transport is a seamless way of moving goods from one point to another using two or more different modes of transport like road, rail, air, or sea. The key thing, a single company called a multimodal transport operator, MTO in short, is responsible for the entire journey under a single contract. Some of the key players, Blue Dart, Delivery, Gati, etc. And this is quite different from regular logistics where you'll have to deal separately with different operators like a truck company, a rail operator, a shipping company, and so on. Basically, an MTO is your Spock, simplifying the entire process. Imagine you are an auto parts manufacturer in Gurgaon, Gurugram. You need to send a large consignment of engine parts to a car assembly plant in Chennai. Coordinating multiple transport companies would be a logistical nightmare, so you hire an MTO. Smart. The MTO provides an end-to-end service under one contract. First, by truck from the factory to the rail terminal in Gurgaon, then by container train to the rail terminal in Chennai, followed by another truck to the car assembly plant. Now let's see how the GST on such MTO services has changed. Before we jump into the new rule, let's first talk about the old rule. Before the change, the tax structure was quite simple. The entire multimodal transport service was taxed at a flat 12% GST. The biggest advantage for the MTO, you could claim full input tax credit ITC on all your business expenses. This was simple and transparent. In fact, this is what the concept of GST that most of us are aware of. So, what's the change? Listen, this is where things get interesting. Now we have a dual rate system. The GST rate now depends entirely on one thing, whether or not your shipment uses air transport. Let's first talk about multimodal transport without air. GST rate is slashed to 5%. Great move to make logistics affordable. But there's a catch. This lower rate comes with restrictive ITC. Now, what the heck is this? I know eligible and ineligible ITC. So if you're wondering what this new term is, it's simple. As an MTO, you can still avail ITC, but only on the transportation services that you buy from others. And rate of ITC is limited only to 5% even if you pay 18% GST. On top of it, you cannot avail input tax credit on other business expenses, be it your office rent, admin expense, and so on. Let's understand this with another scenario. Imagine you are an MTO located in Jaipur. You're hired to move a consignment of furniture to a warehouse in Chennai. For transportation, you charge 1 lakh. For the initial leg within Jaipur, you hire a local truck operator. Main leg from Jaipur to Chennai through train. For the final leg within Chennai, you hire another truck operator. There's no air transport involved. So rate of GST is 5%. 5% of 1 lakh would be 5,000. That's your output tax. So when you raise invoice to the furniture company, total value of the invoice would be 1,05,000. Now input tax credit. For the initial leg, let's say truck operator in Jaipur charges 10,000 plus GST at 18%. Because your ITC is limited to 5%, ITC available is 500. Next, main leg, rail freight service. Let's assume Indian Railways charge 30k plus GST at 5%. You can avail entire ITC because it is within the limit of 5%. ITC available 1,500. Then final leg. Let's say the truck operator in Chennai charges 8,000, again 18% GST, ITC limited to 5%, so ITC available is rupees 400. And GST on other business expenses like admin expense and so on, let's say it is 1,000. But you can't avail this ITC, this is ineligible. So total ITC available is 2,400 and ineligible ITC 3,340 would be your cost. So what is the GST that you have to pay? Output tax 5,000, ITC 2,400, the balance 2,600 is what you have to pay to the government. Now let's talk about the other scenario, multimodal transport involving air leg. Even if one leg of journey is by air, the entire service is taxed at 18% GST. The benefit? This higher rate allows full input tax credit on all your business expenses. To understand this, let's tweak our earlier example. For the main leg, let's say instead of rail, air transport is used. Now the transportation charges is changed to 1.5 lakh. Rate of GST 18%, so output tax is 27k. Next, ITC. For the initial and final leg, no 5% restriction, so entire amount is available as ITC. Then for main leg, let's assume air transport charges 60,000 plus GST at 18%, 10,800. Next, GST on other business expenses, let's say it remains at 1,000. So total ITC available is 15,040. How much GST do you have to pay? Output tax 27k, ITC 15,040. The balance 11,960 is the GST that you have to pay. Now let's talk about what this means for you, the business paying for the service. Of course, you don't pay this tax directly to the government. The MTO would add GST in their invoice and you pay them. The most important thing to remember is you can claim full GST as ITC regardless of whether it's 5% or 18%. To put it differently, MTO's ITC restrictions don't affect your ability to claim full input tax credit. Now that you know, just check if the MTO is applying the correct rate of GST based on the mode of transport used. And for MTOs, remember these 5% and 18% are not optional. If no air leg, rate of GST 5% with restrictive ITC, otherwise 18% with full ITC. More like a dual rate structure. So understanding these changes is key to making smart business decisions. This was all about new GST rates for multimodal transport operators. Hope it was informative. Thank you for watching.